You get what you want from trading. We're going to talk about that next. Good day, traders. Today we're going to talk about you get what you want from trading. Now, recently I've received some emails asking me some broader questions just about explaining a couple of traders' experiences, their struggle with getting consistent with trading and the loop through different courses and spending money and still losing money and still struggling to become consistent or profitable. And one of the questions that I often ask myself, and as you know, if you follow my other videos, you know I've gone through that same journey myself, and I believe that that journey continues all throughout your trading life, is that one quote that I read from Seykota, and I've seen this in several places, is that everybody gets what they want from the markets. And I think it's important that we understand ourselves and what we are bringing to the market in terms of our previous history, our experiences, our mindset, our programming, our beliefs around money, our beliefs around success, our beliefs around trading. And I also think that it's important that you go back and deconstruct things and then look at rebuilding that. Now, I talk about this in our 7-step daily routine for high performance traders. The point of that blueprint and that 7-step daily routine is for you to construct a high performance routine that's congruent with producing the results that you want in your trading. So nothing happens by accident. And often traders will come to the markets, or they've taken a course, or they've, saw something online or whatever it is, and then the great thing about trading is that there's really no barriers to success. There's no religion, race, employment, education, whatever your history is, it's irrelevant. The market doesn't care. And that sort of brings us to the first point here, is that the markets aren't going to do anything for you. They're not going to do anything to you. The markets don't even know you exist. The markets don't even care about you. That's really important to understand. So often, I see comments about stop hunting and stop running and all these things, and I think this is where really traders need to look at a lot of different things, not only their time frame but their approach to the markets. I talk about Peter Brandt a lot. Peter's following Peter and learning from him and getting into his head, and just looking at my own trading, being the silent observer, realizing where not necessarily that I need to trade identically to Peter, but how much I was able to gain in terms of looking at the markets entirely different, looking at myself, looking at my approach to the markets, looking for better ways to extract profits from the markets and limit my downside. But again, everybody has to do this on their own. The next point is that so you yourself are the trader. You're the one who decides to click the mouse, when to buy, when to sell, when to enter, when to participate in the markets, when to stay on the sidelines. You're the person who's fully responsible for whatever happens in the market. Now, you've heard me talk about this again, is there's two things you can control: how much you can make in the markets and how much you can lose. That's it. There's nothing else that you can manage in terms of being in the markets. You are fully responsible. Now, this next part I think is really important, because people often come to the markets from very successful professional backgrounds or sporting backgrounds, academics, whatever that may be, and they expect, because they've been successful in those other endeavors, that should just transmit into the markets and they should be able to extract money out of the markets easily. Now, that can be challenging for some people, because that can lead them down an emotional rabbit hole where, when they do start to lose, they'll engage in behavior that they never thought or foresaw happening to them. So they can lose potentially catastrophic amounts of money, and and again, just keep throwing good money after bad in pursuit of the holy grail of entries and exits. The big thing about novice or retail traders, amateur traders, myself included, is that fear of losing forces us to just keep pursuing this holy grail of entry and exit strategies. And again, one thing that really resonated with me about Peter was that, and the turtles, and if you follow a lot of the trend followers, Jerry Parker, if you've listened to these other great traders talk, You need to understand, Brent Penfold, being a great loser is critical to successful, profitable trading, because they're willing to take positions in the market all the time and accept a loss. But that loss is managed as tightly as possible. And when they're into their winning trades, like Peter Brandt talks about, there's geometric, asymmetrical risk-reward opportunities that allow them to extract 6, 7, and like the turtles talk about, usually they found a 10 ATR move in any instrument was usually about the full gamut of its run. Now some go a bit further, others don't quite make it there. But you know, that's a great return on a 1R trade. So self-worth, experiences, your beliefs about success and money, your emotional state, your ability to emotionally manage risk and the ups and downs of trading, your personal circumstances. You know, people bring a lot of stuff to the markets. You know, they want a quick fix. They want to make money today, or they want to take a whole, you know, their last chunk of money and put it on, you know, red and hope that it works out for them. And inevitably, in most cases, this is where rampant speculation, usually a lot more money comes into the market during a phase of rampant speculation, not so much in trading, you know, currencies and whatnot, but when you get into a bull market or into the commodity runs like Bitcoin right now. You know, I don't know where that's going to go, but everybody's into Bitcoin or into these cryptocurrencies. So could we be entering into a manic phase of rampant speculation? Possibly. I don't know. These are all decisions that you yourself have to make when you decide to participate in the markets. So in closing, you plus the 3 M's of trading, money management, methodology, and your mindset, your psychology and approach to trading, plus the market, offer you the ability to become a successful trader and potentially to extract profits. But the key component of that is you. You know, the 3 M's, people get a system, they think, great, I've got what it takes to succeed in the market, and they blow a ton of money. But do you have the ability to execute the methodology flawlessly, to follow the markets consistently, to be prepared on a weekly basis, to be able to come to the market prepared, not come to the market just ready to pull your gun and shoot? Do you have the ability to manage a trade when you're in it? Do you have the ability to manage a drawdown or a period of losing trades? Do you have the ability to lose money and continue to trade your system consistently in order to hit those home runs when they show up? Or do you start to skip trades because you've become fearful, or you've missed some trades, now you don't want to chase it, you have a fear of missing out, you have a fear of participating? And then also, are you emotionally orientated to the market, to have a reasonable expectation? Are you on a daily basis doing the things that are going to not only improve your skills, maybe sharpen your edge, but also help your emotional state in terms of managing you know, your ability to manage your capital wisely, take the position sizing that's appropriate to your account size? Or are you trying to take a tiny account and turn it into a huge sum of money quickly without, you know, I guess having that skill or that ability to potentially identify those trades that can offer you the risk reward consistently over the longer term? So these are all things that you need to decide and you need to work on. I try to work on this every single week. I find myself making mistakes all the time, but you know, I'm pushing the boundaries for constant improvement. And there's not a day that goes by ever that I'm not working on improving my edge. So hopefully you got some value out of today's video, traders. Everybody gets what they want from the markets. If you're focused on constant progress, you've got a daily routine that helps you not only work on the vision of the trader that you want to become, but works on your skill set, journaling your trades, learning from your mistakes, focusing on what you're doing well and doing more of that. You know, squeeze more from your winners, lose less on your losers, and just constant improvement. So keep focused, keep disciplined, get what you want from the markets, but make sure it aligns with what your goals are. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.